Good morning, everybody. Welcome to Blue Collar Trading. My name is Mike, coming to you from Inauguration Day, January 20th, 2025. It's about 11:40 here on the East Coast. Really, only the futures markets are open. The whole stock market's closed today. I think they actually the futures close, I think today at 1 o'clock, I believe. I'm not totally sure. I took a small scalp earlier here in the NQ. But anyways, this is a special episode because this is the first episode that is going to be published, sort of the kickoff episode of this channel. Basically, I wanted to utilize this to talk a little bit about myself, who am I, and also some of the goals for this channel. So, the name of this channel is Blue Collar Trading. I've been in the trades my whole life. I'm a master electrician by trade. I'm 40 years old, just recently turned 40. I started my own business when I got my master's electrical license at 22. Pretty much that was the youngest that you could possibly get it because it takes 5 years, and it just happened to work out. I started in high school and just, worked vigorously to get my journeymans and then get my master's the following year and started my own company. So I've been in the trades my whole life as a master electrician, and I've been in business here in the Northeast for the past 18 years or so, since basically 2007. So as far as charts go, though, I've always been intrigued with the markets. It's always fascinated me where you could just be sitting down in a chair in your PJs, in your sweatpants, and just click a few buttons, look at charts, and make an income. I was fortunate enough at a very young age. I don't remember exactly how young I was, but maybe like 10 or 12 years old. I was a young kid, and I had some, friends of the family. They were adult friends, basically. And we were just talking about it. I always showed an interest, and it just was fascinating to me. There was a couple people that I knew who had been working full time, and they were on the fence about, trading full time, day trading, and they eventually made the jump and started day trading. And I was like, what the heck? Like, this doesn't even make sense. How can you work from home, clicking buttons, looking at charts, and actually make an income? It didn't make sense. So it always kind of fascinated me. I was fortunate enough too. My mom, she gave me like a small E-Trade account. I forget how old I was. I was in my young teens, and just to dabble with a bunch of, it wasn't even a bunch of money. At the time, it was a bunch of money when you're probably 13 years old, but it was a very small amount of money. And of course, I lost it all pretty much. I made some. I actually doubled the account. And then, of course, you get cocky because you don't know why you doubled the account. You just thought it was magic, and then basically went to zero. So, and that was back in the day when, like, I think per side, it was like a $20 fee. Like, so to buy, it was a $20 fee, and to sell, it was a $20 fee. And so when you have when your account is tiny, you can pretty much blow your account just, by the act of buying and selling. So, anyways, long story short, I have always been interested in the stock market, but because of my trade background and just my nature in general, I have to understand how things work. Like, I remember when I was a brand new electrician starting up, and I didn't know anything from anything, just totally green, didn't know anything about electrical. I always wanted to know why, right? If you hit a light switch and the light turns on, I wanted to know why. I wanted to know the theory. I wanted to know the circuitry. I was not okay with just understanding the, surface level theory of stuff. I always wanted to know the behind the scenes, even with like automobiles. Most people are okay. They just turn the key to their car, it starts up, they put it in drive, they drive to work, and they're okay with that. I wasn't. I want to know, okay, when I turn the key, what's happening? What are all the parts to the engine? How do they all work together? Like, how does that tie in with the transmission? I had to know why. The running joke when I was growing up with my dad, people would always ask him, "Oh, what was your son's, first words?" And he would just joke. He'd be like, "Why?" As that was my first word. had to know why for everything. I was probably annoyed a lot of people when when I was a young kid. But so with the stock market, it's easy to just look at charts and, see, okay, stuff goes up, stuff goes down, whatever. But it's like, it does beg the question, why does the market do what it does? Like, what makes it go up? What makes it go down? Why does it choose to go down here? Why does it choose to go up there? I knew that, most things in life, there's an answer to those questions, right? Like, things happen for a reason. There's really nothing that I know of that doesn't happen for a reason. And so the market, I thought, was like, couldn't really be much different. I mean, there's got to be a rhyme to the reason. And so when you start digging into it, it seems complicated, but basically it's really simple. I mean, it's just supply and demand. The market is just a two-way auction, so it works exactly like an auction except two directions. Anybody who's been to like a real auction, it's kind of one direction. It just kind of goes up, and whether or not there's a reserve or not, like if the price goes up and continues to get bid up and there's a reserve, but the reserve doesn't get met, the auction will just end and they'll move on to the next thing. Well, in the stock market, the auction really doesn't ever just end. It just, the price will come back down. And so basically what it does, it's a two-way auction. It's a two-way price, and it moves via participants, either one way or the other. And so, years of looking at stock charts and years of being fascinated by it, I've come up with a simple way of understanding how the market moves. And that's basically, the goal of this channel is to just share that knowledge and share sort of the simplicity of what I found, of how the market moves. Now, when I say simple, it's not that trading is simple, because trading is not simple. But the reason why it's not simple is more of a psychological thing versus the actual price action or the market itself. So it's, the market is a fascinating place because it's really and I joke with family and friends, it's really the only, I'll ask them, I'll say, what in your mind is the only job, quote unquote, or career or whatever, where you don't have a boss? And it kind of stumps everybody, because even if they say, well, when you're self-employed, you don't have a boss. And I'll look at them and say, well, I'm self-employed, and like, you work for somebody, you have one boss. I am self-employed, and every single one of my customers is my boss, right? So I could have dozens or even hundreds of bosses, right? Because your customers are the ones that dictate everything, just like a normal boss. It's payment, structure of what time you're going to show up, this or that, just the overall job. So when you're self-employed, you have multiple bosses. Typically, when you're employed, you might have one boss. But day trading is fascinating because there's no boss, right? You can show up when you want. Nobody says anything. You can take a trade. You can not take a trade. Nobody says anything. Nobody cares. The market doesn't care. There's no boss. There's no managers. There's nothing. It's literally you and yourself. And you can make every decision completely autonomously. And there's no boss. And that's, in a way, I believe that's what makes it difficult. Because when you have a boss, or when you have a manager, or when you have somebody who is sort of telling you what to do and has the job planned out, it takes a measure of responsibility off your shoulders, right? You may know how to do the thing, but when you have a manager or somebody above you, that they're sort of the ones responsible for it, in a way. I mean, so if you do what they say and it ends up being wrong, really the responsibility is kind of on their shoulders. So whereas in the market, it's all on your shoulders, right? You click the buy button, you click the sell button, everything about it is on your shoulders. So that, to me, is what makes it fascinating, but also difficult. It's really a psychological game of you're battling against yourself because the market's moving. It's very emotional. Nobody likes to lose money. Typically with a job, you're pretty much guaranteed to make money. I don't really know many places where you show up to work and you have to pay money like at the end of the day. It's pretty much a one-way street in that regards. You show up, you get paid at the end of the week, whatever it is. Even if you're purely on commissions, you really, you may not make anything, but you're typically not paying money. You might just be at net zero at the end of the week. But the market, like, you can give money back if you make bad decisions or you let the emotion get to you. So that's what's kind of fascinating about it. It's kind of a love-hate relationship. It's the freedom. There's a lot of things to love, but there's also nobody else to blame when things go sideways. So anyways, that's the winded way of me explaining, what I believe about the markets basically. But back to the goals of the channel are essentially to try to get people to understand the simplicity of the price action and also dispel, some common myths. The two of the most prevalent myths that I see is people come into the market and the market is completely dynamic, right? One day it can stay in a range of 20 points. We'll just use the NQ, for example. And another day it can just rip up, 6, 7, 8, 900 points in a day. I mean, that you can't get any more dynamic than that, but yet people will approach the market with a static strategy, whether it's some sort of, crossover, moving average crossover, or some sort of a trend line break, or whatever it is. They approach the market with a static strategy, and they enter a dynamic market with a static strategy, and they wonder why it's difficult and why they fail. And that's the problem. Your strategy has to be dynamic. And honestly, the way I approach it is I don't really have a set strategy other than being on the right side of the market. Meaning, if the market is going long, I want to be going long. If the market is going short, I want to be going short. The other issue that I see is people say, well, you can't have a bias, right? Oh, you can't have a bias when you get in the market. How else are you gonna be prepared for, you have to be biased, right? Anything else in life, you have a bias, right? You look at the weather and the weather say it's going to be a blizzard outside, right? Like, you're going to dress warm and you're going to dress for it. You're going to have a bias. Okay. Yeah. If the weather person was completely wrong and it ends up being 90 degrees out, you're going to have to call an audible and sort of, figure it out and react at that point. But when we get up in the morning, everything we do has a bias, right? When we get in our car, right, you're going to work, that you cross the street, you look both ways. But yet in the market, you think you're just going to show up, see what it's doing, and then react without any bias at all. It just doesn't make sense. That's not, you can't do that. You have to have a bias. Let's see, what was one of the other the other thing, and let's just zoom in here, right? We'll just come in here. So on the 1 hour chart, NQ, you'll see this up move right here, right? So this up move, people will say, oh, there's more buyers than sellers there. That's not correct at all. That is factually impossible to be correct. From here to here, from here to here, that entire up move, there was the exact same amount of buyers as there was sellers. Okay, the exact same amount. However much volume was in there, we can see from here to here. Let's just do it from here to here. Okay, 1.02 million shares of volume, right? In order to create one volume, that's a transaction, right? One volume is one contract that was either bought or sold. It changed hands. So when you see a million contracts or shares, whatever you're looking at, in this case, it's contracts, it's futures. If you see a million contracts of volume, that is contracts that exchange hands from a buyer to a seller or vice versa. There's not more buyers than there are sellers. There's literally, in order to be a buyer, there has to be a seller. In order for there to be a seller, there has to be a buyer. But what we do see, now let me see if I can find an example here. It's going to be a little bit tough. Let's actually zoom in here. Let's see. I should have had some of this kind of figured out here. This is sort of a bad example, but let's look right here on the weekly time frame. Let's look right in that box. We see a big red candle, right? It has, what does that have for volume? 4.19 million shares of volume. Then you have this green candle with 3.36 million, contracts of volume. Okay. So in this red candle, we know there was the exact same amount of buyers as there was sellers. Okay. It looks like, oh, wow, big red candle, heavy volume. That's lots of sellers. No, it wasn't lots of sellers. It was also lots of buyers. Okay. Then coming back up, we had the same amount of sellers as we had buyers. And so what we want to look for is when we see these changes of direction, you want to, like when you see a big red candle with high volume, just know there's just as many buyers as there is sellers. And a lot of times what can be happening is absorption, right? So you have all these aggressive sellers that are hitting the bid, right? While there's just as many passive buyers on the bid. Level 2, that's what you see in your level 2, right? Just, they call it the book, right? It's just the price is coming down, it's chewing through the book, and all those bids are getting absorbed, and then the price goes up. So when you see this big red volume on the downside, there's just as many buyers as there are sellers, and that's the case for every candle that you see. And we'll get into more of that. I mean, this is just an introductory video. But it's something that I see a lot. They'll see a big down move and they'll say, oh, look at all those sellers coming in. I'm looking at it like, no, look at all those buyers coming in. Yeah, there's a lot of sellers, but there's also a lot of buyers. So that's just another little misconception. So anyways, next thing I want to look at is I want to just go to a single stock view, just because the strategy that I have is kind of like a top-down analysis. You have to understand the context of everything. Like, where are we in context? Are we day trading? Are we swing trading? Are we investing? Just what are we doing? If we're day trading, and I believe for any time frame, even if you're scalping, you really still need to know. You may not need to know what happened back in 2009 if you're scalping right now and you plan on holding for 30 seconds. But I believe if you're scalping, you should know the context of, where we are compared to yesterday or the day before. I think you should have an hourly chart pulled up. You should have a daily chart pulled up. You should still be aware of the context of where you're at in that moment, even as small as a 30-second trade. So basically what we're going to do here, these are the NQ futures on the weekly time frame. Okay. So we see a dinosaur here in the left corner. That's as far back as the chart goes. There might be plans. I feel like I have the highest plan. There might be plans that go back even further. It really doesn't matter. We're back to 99. Okay. We don't need to go any further back than that. But what we're going to do is we're going to look at this. Okay. This right here was the 0809 crash. Basically, we're going to call it a crash. Okay. And we can see ever since we've been sort of parabolic, right? This was the 2020 issue. This was the 2022, and this is where we're at today. So now I'm going to overlay something, and we're going to look at where we're at now, right? Okay, yeah, it's a trending up market, but like at these tops, right, at this 2020, like what was there that caused this, right? What was here that caused this? What was here that caused, this pullback to bounce? Like, what was here? What was here? What is that, right? I mean, there's There's no real price action. There's no, you can probably find a moving average to fit, that, but okay, you found the moving average that goes here. Well, what was here? Wasn't that same moving average? I guarantee you, there is no such thing. So we're going to overlay this. Now, what do we see? Now we see statistics. And this is what I love. I love statistics. I don't know if it's just being in the code book for the last 20 years, being an electrician. I like spec sheets. I like statistics. And so what this is a volume weighted average price that's pinned back at the bottom of 2009, which is what I consider the last sort of like reset cycle, if you will, from monetary policy. I mean, everything's since 0809, quantitative easing, just all this stuff, money coming into the market. That was the last sort of reset cycle, if you will. The one previous to that was obviously the dot-com, bubble thing that we saw. So, but either way, if we're like in 2019, right? And we are right here. What are we looking at? We know statistically these are standard deviations. So this is the actual volume weighted average price. So from 2009 to this point in time, wherever we are, this is the average price and it factors in volume. So markets move by price and by volume. Moving average, anything else that does not include price and volume is completely irrelevant. Whether it's the 200 day, 200 week, 200 1 minute, all those moving averages, they don't matter because they change depending on the time frame. We could go down to a 4-hour chart. We could pin this anchored VWAP at this same point in time. All of these lines would equal the exact same. We could go back on a 5-minute chart back to 09. And these lines would equal the same. There is no difference. It doesn't matter what the time frame is. It's price and volume, and it's how markets work. And so if we're here, what do we know statistically once we get outside of 2 standard deviations, right? Where does price naturally want to be, right? The further we get outside of these, the less time price wants to spend there, right? So we can see even here, we're flirting. We're kind of right above the +2, right above the +2. But when we finally break, where do we go? Exactly to the +1. Okay. We come back up. Come back up. Where do we kind of hit our head off of, right? +2, +2, +2. We finally break above it. Okay. Now we're here. What happens when we get outside of +2? We know that we're in the nosebleeds. By definition, we're in the nosebleeds. It doesn't mean that, we have to have this, but we know statistically price does not like to be outside of that for very long, statistically. So where do we come down? Boom, right off the +1. Now at the bottom of this, and I remember I'm sitting at the markets, like the commentary, if you could rewind in time, everything was bearish. I mean, everything, the at this point in time, the market, everybody was saying the market's going to go to zero, just go to completely zero. So when we were here, the news was great. When we were here, the market's going to zero and the news is terrible. But then what happens? We see one of the most parabolic runs that we've ever seen in the history of the stock market. So let's go here. So it's parabolic, but where do we keep bouncing off of? +2, +2, every pullback, +2, +2, +2. We start to get up here, and we'll compare some other things. This has to do with rates and everything else. The market's complex. It's not just this, but statistically, we know that if we break that +2, probably where are we going to head? We're probably going to head to the +1. What do? Go to the +1, kind of go beat around the bush a little bit, okay? And here we are today. Okay. So this is obviously big picture. This is the weekly chart. But when we broke, look at where we retested, right to the +2. When we retested, where did we go? We went exactly to the +1. We retested that. Now, the interesting thing is anytime you get a break, right? If you were to take another VWAP and pin it to the top of that move, what do we see? It respects the volume weighted average price coming from the top, and it also respects the standard deviations coming down. So on this move down, what happened? We were pushing this -2, -2, -2. We broke up, right? Where did we break up to? The third standard deviation from the bottom, right? Right here. We went 1, 2, 3. We came down, pushed the -2. We respected the VWAP. We came down, flirted with this, bumped our head on that, pulled back to the -1, pulled back, okay? And here we are. So, and then on this pullback here, when everybody thought the market was panicking, I mean, the VIX was skyrocketing. This was back in July over the summer. We had people call it the carry trade, whatever was going on here. Again, where did we retest? We retested this +1 from the previous all-time high over here. Okay. And so now we can see where we're at. I personally think that we're in the nosebleeds. We'll pull up another chart here in a second, but I personally think that we're in the nosebleeds. I think price does not like to be up here for this long. When you talk about meat on the bone, like, where are we going to go? Right? There's more meat on the bone. If this was to come down to something like this or whatever, that seems like a lot. What is that for percentage? 51%. That's still not even quite what the 0809 was. 0809 was like a 59 to 60% top to bottom drop. Okay, so if we did that down to the volume weighted average price, it would be like 51%. People think, oh, that's not possible, but it is possible. We've seen it in the past. But then guess what? It gets bought right back up. And now we're back to a lot of meat on the bone, because let's just do this. Let's take a measurement. If price was to come down here and price wanted to go up 200%, where does that bring us? Right there. Okay. To go up 200% from where we're at now, where would we even need to be? I mean, let's do it. From here up 200% is literally off the chart. There's not enough room on my chart for price to go up 200% from where we're at now. And I'm at like 70,000 on the NQ to go up 200%. Right? So when you're talking about investors and meat on the bone, like, it just doesn't make sense. That's why statistically we don't go outside of these bands for that long, right? Because there's no more meat on the bone. You look at 2020, right? We get outside of that 2 standard deviations. Let's see that initial rip off the bottom. Let's just see from here to here. Okay, that was like 87%. Let's actually just go bottom to top. Okay, so that's 149% from the 2020 event, from here to here. What did I say that was? 150%? 153%. Now, if they wanted that same 153% from here, where would that needed to have brought us? Right here. Right? And we're still not even there. But that's how high. To get the same 150% returns, we would have had to got to this line here. Whereas all we need to do is just go from the +2 to the +1, and then guess what? To get our 150%, it's a lot less. Same thing here, right? Come down. This was rough right here. Because you'd come down, you get this rip up, you come down, get this rip up. You know, this was a little rough. However, if you don't look at statistically, if you don't overlay the participants and where their volume average price is of those participants, you're just kind of caught in water because there's no moving average you can pin from up here, right? They're all back over here from some delayed time frame. So anyways, this is a little bit of a rant, clearly. You can actually tell them a little bit passionate about this, but essentially this is the goal of this channel, is to teach people that this is how the market moves. It moves because of participants, and it is meant to sort of stop people out. We'll call them retail traders or whoever, but these down draws that we have, that's why right here, right, the news is good, because it's trying to get people to buy so that it can stop them out. And then once we get down here, once we get down here again, now the news is bearish. So now everybody catches on and starts to sell when the intention is to rip it right back up in everybody's face. So that's essentially how the market works. And the other facet of this is the market is fractal. So let's go down on a much smaller time frame. We're going to go to 5-minute time frame. Okay. And we're going to take a look at just these local lows back a few days ago. So this was like last week. So we're going to pin an anchored VWAP. And this is we're just randomly going to do this. Pin this here. We're going to see what we have. Okay. The market's fractal. Okay. It respects these VWAP bands no matter what scale you look into. You can go to the 10-second time frame and it's going to respect the bands. Okay, so we can see +1, -1. This is the breakout. Okay, comes back, tests there, breaks out there, goes to the +2, pulls back, goes to the +2. We're starting to pull back, and now here we are currently. So, and then even if you go zoom into like an intraday, typically what you're going to see a lot on this channel is you're going to see the previous day's anchored VWAP from the open. So let's do that here. So this is yesterday's anchored VWAP. Okay. And you can see even from there, we respect these levels. When you get a big move, it's usually moving from one level to the next. When you get a breakout, it moves from one level to another level. You get a pullback. It respects these levels. That's the +3. Come back down to the +1. We're kind of bouncing off the +2. And then obviously you have the intraday VWAP here, but the markets are closed, so there's not a ton going on. So the goal of this channel is to teach people how the market actually works. And then the beauty of that is when you know how something works, you can just have your own strategy. You don't have to try to draw your own trend lines, and you don't have to, which moving average crossover and MACD this and RSI that. None of that matters. That's not at all what moves the market. That's 0% what moves the market. It's literally price and volume via participants. And the anchored VWAP is the only tool that I've found thus far that actually tracks price and participants. And that is when you know where the average price of the participants are that can actually move the market, then you can have an edge. And then you can approach it in a way with a dynamic strategy, right? And okay, what's the range? What is the expected range? What can I expect? And then you can set your risk and go from there. So I hope this helps. Basically what we're going to do every morning, I'm going to try to have a pre-market forecast published by maybe like 8:15-ish Eastern time. That's the goal. I'm going to film it maybe like an hour before that, publish it. It's going to be maybe like 10 minutes. And we're only going to deal with futures. I mean, we're not going to get into individual stocks and all that. We're just going to deal with, the market as a whole. So it's primarily going to be NQ and ES. We may take a look at some of the big names, Nvidia and different things like that for swing opportunities. But essentially, you're going to have a pre-market forecast every day in the morning. And then at the end of the week, the goal is to do a weekly recap. And that's going to serve two purposes. It's going to see A, how accurate were the forecasts, and then B, if we took trades, how well did I stick to my own forecast? Because that is a big battle, right? You can nail a forecast and still lose your shirt because for some weird reason you went opposite. So it's going to be kind of a 2-part recap to say, hey, look, how accurate were the forecasts? And then, what did I do? What was my reaction? Did I even follow my own plan? The other thing that we're going to do different on this channel, it'll be interesting to see too, because like if we get no likes and no subscribers, and no viewers, it'll be interesting to see. Basically, we're not going to ever show P&L. Okay. I'm never going to show my P&L. I may show how many points I extracted out of the market. Let's say I took a trade on NQ. I may show, okay, top to bottom, I captured 70 NQ points, but I'm not going to show the size or the P&L. And the reason is I truly believe that doesn't actually help anybody, right? Like, what is me showing my P&L going to help? If I show, that I traded 50 contracts and made $150,000 in the morning, then it's going to make everybody who's in the beginning stages, either it's going to give them false hope and say, oh, if he can do it, this must be easy. So then it's going to set them up on the wrong foot, or it's going to scare people away and think that that's not attainable. And on the other hand, if I show that I'm trading, 1 micro and I'm happy, and I extracted $50 out of the market or $75, and then I show my P&L, then I get made fun of, right? And then that makes me feel bad. So literally showing P&L doesn't do anybody any good. It's not going to do the viewers any good, and it's not going to do me any good, right? Because nobody cares about P&L. The market doesn't care. Nobody cares. Everybody's situation is completely different. What they can invest, how they're investing. Are they doing prop firm? Are they doing real money? Everybody's situation is different, and the market just is what it is. So showing P&L just doesn't help anybody. It causes views. It causes clicks. All the people that show their flashy Lambos and P&L, they're not actually making their money via trading. Even some people, the leading streamers or whatever, they'll show their P&L and their payouts and stuff. One thing they don't show is how much they actually invested into that prop firm, because I guarantee you, if somebody takes $100,000 or a $500,000 payout, ask them how much they actually paid into the prop firm. They're probably still red. And really the money that they're making is just from, affiliates or views or whatever. It's not from actual trading. It's just not accurate. So there's a handful of traders that I do respect and I do hold in a high regard, but for the most part, there's a lot of deception out there. And, the goal here is to really help people understand how the market works and how to trade. So I think what I'm going to do is I recorded 4 videos last week as practice videos. I didn't publish them. I just kept them private. Couple reasons. This whole recording and microphones and stuff, this is just not me, guys. I'm a master electrician. I'm in the trenches with tools. I understand, stocks and charts and stuff, but from a, recording and technology and all that, you're going to have to just bear with me a little bit. So, I'm blue collar, but what I might do is I might publish those videos. You'll see they're going to be published after the fact, but you're going to see that they were recorded beforehand. Obviously, you're going to see the timestamp in the bottom right corner with the clock. But we nailed it, 4 for 4. We did Monday through Thursday. We were 4 for 4. There was 2 of the days we were going completely against the bias for the day, and that turned out correct. Everybody was bullish one day, the market went down. Everybody was bearish the other day. I don't even remember. You'll have to just watch the videos, but and we nailed it there. So pretty cool, but I'm going to probably publish those just so you can see basically what to expect. The first actual published one is going to be tomorrow morning. I'm going to record that sometime around 7, and then hopefully have it live, or published by around 8:15. So some of this, my schedule is going to be a little bit dynamic. I own an electrical business. I got a number of employees. I still am very much involved with that. So I don't spend a ton of time day trading. I mostly swing trade, but it's all the same. Like where you place your trades and whatnot is identical. So, but just know, like last Friday, I had an appointment and I couldn't produce the video. So there could be a time to time when that happens. I'm going to try to avoid that, but that's the nature of it. So that's where we're at. How long is this video? We are, wow, 40 minutes. I thought it was going to be closer to like 20. So hopefully it wasn't too much rant mode. And we'll see where this goes. I think it's going to be fun. I think it's going to be interesting. I think the perspective that I have on the markets and how things work is pretty accurate. And I think a lot of people could find value in it. So that's what I'm hoping. If you want to see more of these videos, obviously, like, subscribe, do all that stuff that I don't know how to do. Just if you're here, I'm sure you know how to do it. There's a like button, there's a subscribe button. I think there's a bell notification, all that sort of stuff. Eventually I will go live. I just gotta start somewhere. Gotta figure out what I'm doing here with the software end of it first. And then we'll go from there. All right. So I'm excited. And we'll see where it goes. Happy Inauguration Day. Take care.